Hello and welcome to Raj Sabha TV. You're watching The Big Picture with your host Rajat Kane. In the next half hour, we'll discuss the shape of Indian economy in the times when major economies around the world are seeing slow growth rate. The International Monetary Fund on Tuesday pegged India's economic growth forecast to 7.3% for the financial year 2020 and 7.5% for next fiscal. The IMF report also cited continued recovery of investment and robust consumption amid more expansionary stance of monetary policy and some expected impetus from fiscal policy. It, however, said in the near term, continued fiscal consolidation is needed to bring down India's elevated public debt. This should be supported by strengthening goods and services tax compliance and further reducing subsidies. The IMF also commended the government for taking steps to strengthen financial sector balance sheets through accelerated resolution of non-performing assets under a simplified bankruptcy framework. The report, though, argued that global growth, which peaked at close to 4% in 2017, dropped to 3.6% in 2018 and is projected to fall further to 3.3% in 2019. Does this report mean economic stability and indication of a solid growth in future? To discuss more on this, we're joined with a guest in the studio, Dr. Yamini Agrawal, Professor of Finance, Indian Institute of Finance, Senior Journalist K.A. Badrinath, and Mr. Ajay Dua, former Secretary, Ministry of Commerce and Industry. Thank you, all of you, for joining us. Dr. Agrawal, I'd like to begin with you. This IMF report, it pegs India's growth rate. Also, it may be a little variance from its January report, but what does it mean in total? Does it mean that India's economy is in firm footing?
Yes, it actually says that the economy is doing extremely well and it is one of the fastest growing economies that are there. And because of the reforms that have been introduced, whether it is demonetization or whether it is the GST, the economy has been stable and has been able to grow at the clear good path. Also, it has been saying that the resolution which has been brought about, which is the insolvency and bankruptcy code that has been brought about, has been able to resolve a lot of NPA problems in the country. Also, the focus has been that the fiscal deficit should be maintained at a particular level, which this government has been trying to maintain, which is about at 3.4%. And it says that the fiscal deficit should be brought down to 3% level, whereby they need to reduce down on the subsidies and other public expenditures or public debts which are there. The IMF also clearly indicates that if the country is likely to grow, it needs to bring about more investments and more consumption that is there. Whereby if we see the RBI has already reduced in the last two policies which have been there, monetary policies that have been there. Yeah. They have actually reduced the repo rates and asked the banks to pass on the benefit of the lower rates to the industry so that there is a greater industry offtake that is there. So there is a certain amount of an impetus which is being provided by both fiscal measures in terms of investment in infrastructure, as well as by let's say bringing about e-governance, which makes it easier for bringing about industry offtakes, and how the resolutions of the different banks is going to bring about more credit to the industry.
Mr. Dua, we saw that post demonetization, there was some variance in the economy, but now with GST and more compliance, and this report also indicates that perhaps more compliance is required for further growth. What other factor has been the contributing ones for the Indian economy? And as it's argued that it seems to be fairly stable if you compare it with the global scenario.
Indeed, it is. I would say that the Indian economy, compared to the global economy, has been doing much better for last several years. It's not just the year 2018-19.
Right.
The world, in fact, today at 3.6% and anticipated to be 3.3% going forward, is growing at a faster pace than it has averaged, say, during the last decade.
Okay.
One of the largest contributors to it, to the global economies, the rate being a little elevated, is the United States economy doing well.
Okay.
United States is now still, despite its labor market issues, is still growing at about 4%, which it hadn't for a long time. The question is, there is a slowdown in the global economy, one in Europe, across Europe. Second, we are seeing a slowdown in China.
China. Yes, yes. That's one.
Third one, I would say, the emerging markets, which have grown higher than the advanced markets in the last 1 decade. India is no exception to that. The emerging markets rate of growth is also slowing down, expected to be about 4.4% going forward. Having said that, so the Indian economy doing well, yes, so far we were being driven by consumption, not so much investment. That's the point which even the IMF report highlights, that the consumption slowed down in Q3. That's where our growth rate of the GDP also came down by, Badri, it was about now 6.6, isn't it?
6.6%.
Yeah, 6.6 down from because the consumption, both government consumption slowed down as well as the private sector consumption.
Okay.
I would say the Indian economy's macro parameters might be sound. We have stability because inflation is low. Also, the global prices of crude, which determine a lot on what happens to our fiscal sheets, our level of subsidies, and our inflation, that's been, I would say, the benign. So these are the factors which have contributed, but while IMF has slowed down our estimate of the growth rate to 7.3, ADB and the World Bank had already done that in the last 6 weeks. This is the third global institution, multilateral, which has now brought this down to also. But the IMF is very clearly pointing out, saying that yes, we are projecting 7.5, but it is on the basis of a number of things where we expect the investment cycle to take off.
Right.
The consumption could be more robust. And then it's also listed out a host of the structural and the financial basically financial reforms, talking about need for the public sector banks becoming more their structures improving. It's talked of there being need for bringing down fiscal deficits, subsidies, and it has also pointed out that the labor sector's hire and fire policy, it's clearly spelled it out, that needs to be addressed. And then only we would be able to anticipate the 7.5%, which is as of now estimated by it.
Right. Mr. Badrinath, there are clear indications by IMF in the report that economy will grow, as Mr. Dua also added that, but there are certain caveats. Among those include consumption, investment, tax compliance, and subsidies. Where do you see the balancing act going in time to come?
See, before coming to the balancing act as such, first indication of moderation in the economy is available right now. Earlier, the projection was 7.5%, which has been brought down to 7.2% or 7.3%. It's not the first. Even our own Reserve Bank had from 7.4%, the estimates were brought down to 7.2%. Asian Development Bank last week has brought it down to 7.3%. So my guess is that some amount of moderation in the economic growth seems to be on the horizon. My guess. Second issue here is that the resilience in the economy has kept it going, rather than any policy intervention or some proactive measures that the government has taken or any such thing. Second. Third, coming to the consumption part that you have raised, yes, consumption has been hit in a big way. And perhaps there has been restlessness that, it's a jobless growth. consumption is not there because the people's do not have much of money in their pockets. Unless you have money in your pocket, you're not going to go in for consumption, or you try and postpone the purchases, bigger purchases, isn't it? Even your the Prime Minister's Kisan, which you have given out 2,000 rupees in 2 installments. These small things will not push up consumption in a big way.
Okay.
Because the kind of money that comes into the system is limited, and its impact is also very limited. Henceforth, my guess is that we are heading for a tougher time.
Okay.
That's precisely why Reserve Bank has shifted its focus from inflation management to supporting growth. Otherwise, you wouldn't be seeing, as Dr. Yamini has pointed out, you wouldn't be seeing 2 times Governor Shaktikanta Das cutting interest rates by 25 basis points each in 2 months. So that means, and also added to this is the headwinds in the global economy, where the slowdown has been pointed out to you by Ajay ji and all that. And there's a combination of factors. It's not there is anything mismanaged or any such thing. The point is, there's a limit or the very little elbow room that even the finance minister would have had to manage his resources.
Right.
And secondly, investment has not at all picked up. Private investment especially. You cannot run this economy with just public investment. And you have resource crunch. And this resource crunch will not allow you to go beyond a point. You know that the fiscal deficit is already touching 3.4%. And this year again you have set it at 3.4% again. And that means you are not able to pull down your borrowings. And if you are not pulling down your borrowings and the government is crowding out the market, then what happens? So there are a combination of factors where there are certain red signals pointing toward. Even today, we are the largest and fastest growing economies, no doubt about it. Thus far, we have done well. The point here is, for the next government, when it takes office in June first week, there's a huge task cut out in terms of recalibrating your policies.
Sure. Dr. Agrawal, we will discuss Indian economy vis-a-vis the world economy later. But first, like the domestic indicators, where do you see the challenges coming from? As Mr. Badrinath, he argues that, there are several red lines, whereas you are firmly arguing that Indian economy is going on a very strong trajectory.
So if you look at the challenges which are there, the first important challenge would be creating jobs for people. So one of the important factors is jobs. The second important factor would be taking care of the farmers' distress which is there, because the prices in the farm outputs have been extremely low, and as a result the farmers' distress has been continuously growing. Farm loan waivers are not a solution to them, because that further puts on more pressure on the banks, which are already into serious problems with the NPAs that are there. So these are 2 important challenges which any government would face. As far as the growth is concerned, we are not concerned about the slow growth which the IMF has highlighted by 20 basis points for India. Because primarily IMF also clearly says that there are global pressures which are there, which is actually pulling down the growth in India.
You mean the 20 basis point growth?
Yeah, 20 basis point growth which is reduced by IMF estimates that are there. So when we say that when IMF is looking at it, it's saying that the global economy is slowing down. So there is likely to be a slowdown in India as well. So there are not domestic factors which are much into the play. What it has also said that there is a need for land reforms, labor reforms, and one important reform which I believe needs to be done there is also judicial reforms, which would allow more people to participate in the economy in the formal manner. So these are different factors which need to be taken into consideration. Your inflation is at a very good rate as 2.57%. It can go or stretch up to 4%. So you can actually bring about public investments which do allow the inflation to go up to a certain extent. You are having a foreign exchange reserve of 390 billion which is there. You are having a good rating in the market. Your credit ratings have gone up. Your ease of doing business rating has gone up to 77 rank, which is there. Your overall e-governance and digitalization is taking place. Another important aspect is financial inclusion, which is likely to give impetus to the economy, is also taking place at a faster pace. So people are shifting from the informal segments to the formal segments, right from the GST, also because of the Pradhan Mantri Jan Dhan Yojana, which is there. So there is likely to be more growth in the economy as and when more informal sectors become a part of the formal segment. So I don't see consumption as a serious problem, but I do see investments as a problem, because the industry is not seeking too much investment right now and is not bringing about growth, and which is also not leading to the jobs which are there.
Mr. Dua, I mean, at the policy level, where do you think that more reforms or perhaps more steps needed to be taken so as to address the issues or address the red linings which are there in the report? I'm not saying there are several red linings, but if there are indications that perhaps certain steps need to be taken. So, vis-a-vis policy matters, which are the ones you would like to
I think let's look at the very broad segmenting the economy. In the agriculture sector, it's been highlighted repeatedly that one single factor which is needed is market reforms. And market reforms would include policies relating to export, import of agriculture products as well, and making sure that the farmers who in the current environment seems to be paying for producing more because the price dips and the import-export policies are not in sync with how to step up his revenue. That's one large area, and I'm not emphasizing already, which is well known, that how to optimize use of water so that we remain less and less dependent upon monsoon for agriculture production. In the area of financial sectors, repeatedly mentioned that NPAs of banks and the public sector banks are a major drag to investment in the economy. With over 75% capacity utilization in manufacturing, the figures just came out a couple of days ago, that at an all-time record in the last 3 years. This was a time when the industry would be preparing to expand, but the access to domestic funds, even though are high costs compared to international, the banks are not in a position to lend because their own balance sheet is poor. Their equity has been eroded by years of reckless lending, I would call, partly contributed by structural issues, but also by their not having due diligence while undertaking their loans. Third, I would see our services sector, which is the major sector of the economy. It's no longer manufacturing, it's no longer agriculture. The two together they barely add up to 40%. The 60%, close to 60%, is the tertiary services sector. The services sector, I think, has been growing much more in the informal sector than in the formal. I think we need to, our data about informal sector's role, its expansion, the issues facing it, its deceleration, that is very poor. We go more by hunches and estimates rather than what's actually happening there. Because it is informal, it's traditional, it is partly household, partly unreckoned with at all in our entire scheme of things. I would say much greater policy sector, segment by segment within the services sector, government paying far more attention, looking at policy issues of each of those sectors rather than merely clubbing it or leaving it to its own fate and only concentrating on the remaining 40%.
Right. Mr. Badrinath, if you look at the sector-wise growth, I mean, where do you see the biggest challenge coming from?
See, biggest challenge is if you want to, address the issue of consumption, then improving the rural wages is going to be the biggest challenge for you, because here the largest workforce is in the rural areas, whether it is industrial or semi-industry or in the rural agriculture sectors. There, the wages are very limited. Unless you increase your capacity to spend with larger wages, you are not going to see consumption going up in a big way, because urban markets have very limited means to expand. Beyond a point, you do not, and most of them, most of the urban consumption is based on credit. And one, rural credit availability needs to be improved. Second, rural wages need to be improved in a big way. These two things are going to be a big challenge. Second issue is the financial sector reforms that we have been talking about. Financial sector reforms means what? One is the settling very quickly the issue of non-performing assets with the banks. Second is improving the credit offtake because of it, because there is a huge liquidity crunch. And for some reason, the industry is very apprehensive about committing more projects. Or either it is expansion or brownfield for us.
It's a cycle that you say that there is a liquidity crunch, and also organizations, companies are reluctant to invest.
Reluctant to, unless that investment cycle revives. This, whatever we are talking about, even sustaining 7 or 7.2% growth is going to be very big difficulty. हो सकता है कि भाई China has slowed down to 6.3% and we take pride in going at 7.2. But let us not forget that I have touched the double-digit growth of 10% plus. So where are we heading for? If you think that you want to be the third largest economy or second largest economy by 2022, as BJP's manifesto says, so you need some drastic reforms, and it needs to be combined with administrative reforms, where the delivery of services at your doorstep is the key.
Dr. Agrawal, as we said, that there is a global scenario as well in which we are seeing a slow in the growth trajectory, although there is a growth in US, but largely in China and in European country, there has been slack in growth. Not phenomenal, but something which can't be misread. Is Indian economy prone to any variance or any disturbance, any changes in the world economy drastically?
Well, Indian economy is completely globalized, but in terms of our GDP growth rates, we need to see that the major contribution comes from our consumption and investment. So when we actually look at the global slowdown that is there, so the global slowdown is likely to affect the Indian economy in two ways. One, the investment that is coming from abroad, which we have been trying to wire through the Make in India program or through the FDIs which are there, is likely to be affected because there is a global slowdown. Second, the exports that we actually make are likely to slow down. Also, there has been a US-China trade war which is there. Also, today there is a news that the US intends to put in punitive measures against EU which is there. And if there are more tariffs problems which are there and the economies move towards protectionism, there is likely to be more problems in terms of providing our exports which are there. And obviously that is going to affect our current account deficits, which are likely to be affected by the slowing down of the exports, because we would need foreign exchange which is there. Though we have sufficient amount of foreign exchange reserves that are there, and we are attracting a large number of foreign direct investments that are there. Another important factor is that India has been concentrating on its growth through its domestic economy. So when we are talking about consumption, if there is, let's say, greater incomes in people's hands, there would be a greater set of consumption. So there is growth in terms of incomes which we have observed, but there has not been sufficient amount of job creation which has been there to meet out the demographic dividend we have of the younger population that is there. So if we are able to create jobs for them and we are able to provide incomes to people through different support systems, then we are likely to see a better consumption. Also, the investments are likely to pick up as and when the government makes it easier to do business. So I do see that there is likely to be more growth in the economy.
Right. Mr. Dua, I mean, what are your conclusions? Like, we have done substantial amount of work in terms of economy. It's growing at a steady pace, although there is little variance, but it can't be like said, it's a huge sort of a dip. What more needs to be done so as to maintain that stability?
I think we need to be worried about having one too many objectives to be achieved simultaneously. If we are talking about growth and not saying that we will worry about the welfare programs of the people at the bottom, then the only way you can have the large number of people of the economy also benefiting is when you are in a double-digit growth rate, where China had it for 30 odd years. China 6.5% is over a base of $12 trillion. We are talking of 7% over 2.3 or 2.5 maximum by the end of this year. That might be the size of our economy. So China still continues to add one hell of a lot of the delta or the increments to the global economy of global growth. And we are, say, 1/6 or the 1/5 of the Chinese economy. So let's keep that always in perspective in mind. So what I'm saying is, if we are not going to be able to get the double-digit growth, which doesn't look like anyone's claim, any party's manifesto or likelihood, then we have to be absolutely cognizant of the fact that we have to work our way from down upwards, rather than worrying so much about what happens to our organized industry, which doesn't employ people, which, all right, you create a fiscal regime which allows the rich guy to invest, expand, but if you want to expand the economy, if you want to expand consumption, then the kinds of things which Mr. Badrinath mentioned, rural wages, rural expenditure, education, health, all those things will add up to your making a sustainable way forward, and not government's concentration on the organized sector, and within the organized sector on a small section is not the way forward.
Right. Thank you, gentlemen. It's a vast issue, and I'm afraid we have just a limited time. So clearly, there is a stability and a solid growth trajectory, yet there are several measures and steps that needs to be taken, and the caveat in the reports that needs to be looked at so as to maintain the stability and the firm footing of the Indian economy. Thank you for watching Big Picture.